must have the fractal energy confirming the trade. In my method, the fractal energy, the next higher time frame, is not optional. Now, how do we confirm it? The way that a lot of traders do it with multiple time frames is they say, I'll only take a trade in the direction of trend of the higher time frame. Now, here's the reason that I don't like that. Number one, the higher time frame obviously is slower. In this case, 3 times slower. So we're going to only get 1 bar here for every 3 bars on the setup chart. Number 2, as we've already shown, trend is a lagging indicator. So why would I want to confirm my trade with a lagging indicator on a 3 times slower chart? You see, the timing between the two are just too loose. It's too loose. So I actually want to do the opposite. On the higher time frame, I want to use the potentially leading indicator, the faster indicator, which is momentum. So since I'm looking for a short here, all I need to see is that momentum is down on the higher time frame on my fractal chart. And I also like to be trading in the direction of cycle on the fractal chart. So that's basically how I confirm my trades. Very simple. Just trading, make sure I'm trading in the direction of momentum and cycle on the higher time frame. Trend, I don't care what it is on the higher time frame. It's too slow. Okay, so let's put it all together and just show you how really pretty simple this is and how I would analyze a trade. So we've been going down, 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 down for a while. I have a rule that the longer the trend continues, the less likely I consider it will continue. So when I trade with a trend, I only want to trade early in a new trend. So now I wait and we get the price breaking above the 50 MA. Great, starting a new trend up. And it retraces. Remember, I like to buy retraces, buy low, sell high. I'm getting wholesale prices down here. I'm getting in before the breakout traders. Breakout traders enter here, I'm already in. By the time the breakout traders come in, they're adding to my position, basically. In other words, they're continuing to push the market in my direction, which is why I love them. Yeah, keep pushing the market in my direction. Thank you. But I want to get in down here. So what we do is we just go through our 5 energies, and again, I always go through them in the same order. All right, so we're early in a new trend. I will only buy or sell the first 2 retraces in a new trend. This is the first retrace. So trend, yes, we got trend on our side, number 1. Now, is it a strong trend or a weak trend? Momentum, that's our second energy, that's our second question. Look down at our momentum indicators holding well above 0. So yes, it's a strong trend. Okay, we got 2 out of 5 energies. Cycle low, yep, angling back up, great, we got 3 energies. Timing. Number 4. We're bouncing off of the red line, which is the 50 Fibonacci level. So even though we have a retrace here, we have a support level to bounce off of. So yes, we have 4 energies. Now we go to our next higher time frame. Now if you notice, the 50 MA is angling down here, but I'm looking to go long. So I'm trading against the trend on the longer term time frame. But I don't care, because that's a lagging indicator on a slower chart. So, and remember too how I showed you the trend and momentum could be going in different directions because they're independent energies. Well, here you go. Momentum's going up, trend's going down. So all I care about is that the potentially leading indicator momentum is going in the direction that I want to trade in, and cycle is too. So therefore, that's the 5th energy. The trade is confirmed. It's a 5 out of 5 trade, and I could take that. Okay, so that's it. Now, let's move on, and let me focus on the timing aspect of it. There's 3 parts to this final section. Number 1, we need the right indicator, which I'm going to give you. We need the right inputs. We're going to make some changes to that indicator. And then, even that's not enough. Giving you the right indicator and the right inputs would not help you in the least. Number 3, I need to teach you how to trade the indicator, the right technique. Fortunately, I am going to do that today as well. I'm going to do all 3 of these things for you right now. Okay. Oh, you know what? Yeah, I had the slide in here, the order chaos cycle. We're going to skip this one today. All right, because I just want to make sure I get enough time here and also some time for questions at the end. I do another webinar on other types of cycles. and the order chaos cycle is part of that. So here's what we want to do. And you might want to write this down because this gets very, very specific. So the indicator that I use for cycles, ironically, is the stochastic indicator. Now, I say ironically because the stochastic indicator is not a cycle indicator at all. It's not. There are indicators created to be cycle indicators. Stochastic is not one of them. If you look at the mathematical formula, it's actually a momentum indicator. Now, the interesting thing is I've bought a lot of those cycle indicators that were created by really some very intelligent people, geniuses. And I'm not saying they're bad, but I've just come back to this because I found a way to trade this that works better than any of the cycle indicators I bought. And the reason that it's so good is actually because of the momentum aspect to its formula. So I'm going to show you why that's so important here. Now, because it's not a cycle indicator, we do have to make some changes. Oh, by the way, we're just using the good old-fashioned stochastic indicator created by Lane. So we're not using RSI or double stochastic or any of the other fancy ones. I mean, those are fine, but for our purposes, we're just using the traditional stochastic indicator. If you have a choice between fast or slow, choose slow. But then, to turn it into more of a cycle indicator, we need to make some changes. So period D, or sometimes it's called percent D, you want to change that value to 3. Whatever your default value is, change it to 3. Period K, or percent K, as it's sometimes called on some charting platforms, we're going to change that to a value of 5. Smoothing, or some charting platforms call it average, change that to a value of 2. The other thing we're going to change is our upper and lower horizontal lines. We want to change those to a value of 20 and 80. 20 and 80. Also, you want to make sure that the indicator calculates intra-bar, that it doesn't wait until the bar closes to print the indicator on your chart. So you will actually be able to see it flickering up and down as the bar forms. Okay, so that's the indicator, and those are the inputs. Now, let's do a quick little review because I find that people forget this. People get so enamored with indicators, they think they're the Holy Grail or something. This is not the Holy Grail, but it's very powerful in its context. So, got the right inputs. Remember, by itself, this is only measuring one energy, and any one indicator or one energy does not help you make money. So we only use it strategically with the other energies. With cycles, what that means is we're not going to buy every cycle low or sell every cycle high. We're only going to trade the cycles in the direction of the trend early in the trend. And early in the trend is defined as the first 2 retraces in the trend. We're only going to trade the cycles that have momentum behind them. We're only going to trade the cycles that have the fractal energy aligned. Remember, alignment of all these energies, preponderance of the evidence, uncorrelated energies all agreeing is what creates significance. Now that's all review. Here's the new one. We're only going to trade what I call second chance indicator patterns. Okay, I haven't covered this yet, so this is new. Second chance indicator patterns. So, what is this? A second chance indicator pattern, what it's really doing is it's indicating a momentum shift, a little typo there, should say shift, not shirt, a momentum shift at the top or the bottom of the cycle. Remember how I said stochastic mathematically calculates momentum? Okay, so here's where that becomes critical. This is why this works so well. This is why it's so accurate in finding cycle lows and cycle highs. The final low, the final high, so you don't get stopped out so often. That's the point here. So right now I'm going to show you the mini divergence pattern. There are 5 other second chance patterns. There's actually a total of 6 second chance patterns I've documented. And again, what are these for? They're to help you find extreme high probability that you found the final cycle low to buy, or the final cycle high to short so you're not getting stopped out. That's the significance of this. And it's super, super high probability when you do it with the other energies. Okay, the easiest way to do this is just show you a chart, to do it visually. So let's go for it. All right, so here's our stochastic indicator, and this is a chart of the stock Verizon. It's a 5-minute chart, 352. There's our new inputs. Now, let's talk a little bit about this indicator, though. As you can see, price is going down, 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 making lower lows over here on the left of the chart. On the other hand, our stochastic indicator is just bouncing around the bottom. It's not making lower lows. Why? Again, if you look at the formula for stochastic, it's what we call a bounded indicator. And what that means is the mathematical formula restricts it in its valuation. It's only allowed to go to a low of 0 and to a high of 100. So once price pushing down brings it down to 0, if price continues to go down to 0, or continues to go down, I should say, the indicator can't go below 0. Mathematically, it's not allowed to, so it just bounces around the bottom here. Now, what are some of the traditional buy signals for the stochastic indicator? There's primarily two. One is when K crosses back above D. In this chart, K is the black line and D is the slower blue line. Another traditional buy signal is when the indicator gets below the lower horizontal line and comes back up above it. But if you used either one of those traditional signals, well, here you'd be stopped out, here you'd be stopped out, here you'd be stopped out, here, okay, here the market finally goes up. So you'd have 3 losses before a win. So the reason those signals are bad, again, is just because it's a bounded indicator. So these crosses of the 2 lines or below the horizontal line moving up, meaningless. Again, when we come to a high, okay, we get a sell signal, but the market goes up, makes a higher high. Another sell signal. Again, the market goes up, breaks this high. You would have gotten stopped out 2 times, and that's the whole point. We don't want to get stopped out. We want to short the highest high. We want to buy the lowest low. So what does work is looking for a momentum shift. Remember, momentum